Hi everyone, my name is Piterpakulski. Today we'll continue building financial model for a manufacturing business idea, and today we will be talking about fixed payroll. At the previous video we were modeling payroll which depends on the amount of shifts per day that we have, and today we will be modeling fixed payroll. So if you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video I will be giving the link to the playlist where all these tutorials will be placed, and when the whole financial model will be ready, I will place all the links on creation of this financial model in the description of this video as well, so you can watch all the tutorials. So at the previous videos, let me just quickly remind you what we did earlier. So we created product A and product B. We can switch on and off each product from calculations to see the performance of the business with or without this or that product. Here we place the productivity, how many units of product A and product B being hourly produced. Here we have coefficients for these inputs to make us easily play during sensitivity analysis, scenario analysis. So all blue cells are inputs. So we have two lines, we can switch them on and off. We can, for each line, we can allocate the time for manufacturing of product A and product B. Here it is. Then we specify when we're going to open the operating activity, when our manufacturing business idea will start generating cash. Then we assume that we have 3 shifts for each line. We can switch on and off each shift from calculations, and we can specify when each shift appears since we start operating activity, on which month of operating activity of our project does each shift appear. So this is, for example, 12 months, this is November 24, so we can easily play with all these inputs. We can switch on and off shifts, so it is kind of a simple way to play with data. So then we specify the duration of a shift in hours. Then we specify how many work days per month do we have inside the typical year. Then we have a library of all raw materials that participate in our manufacturing process. This is the price for 1 unit of these raw material, direct cost item. These are coefficients for scenario play, future scenario play. Here we specify if we do have any displacement of purchase before we really need these raw materials. So we have, for example, if here is 0, then we can purchase this raw material month and month. If we place here 3, for example, so it means that if we need this material today, we will have to pay and order this material 3 months ahead, and we can play with these inputs as well. Also we can specify the purchase interval for each raw material. So 1 means that we purchase this raw material monthly. 4, for example, means that we purchase this raw material once in 4 months. 12 means that we purchase it once in a year. So we can play with all these inputs. Then we move to product A and specify what raw materials participate in these in manufacturing of product A. Then we specify how many units of this raw material is needed to produce one product A, and the same story is done for product B. Then we move to investment plan, and here we specify what we invest in. Here we specify when we invest and how much we invest before we start operating activity. Then we move to payroll that depends on amount of shifts we have. So this is line 1. These are positions for line 1. This is the salary per person on one position, and here is the amount of people on each position depending on the amount of shifts. So if the factory works one shift, so we need this amount of people. If we work 2 shifts per day, then we need this amount of people for line 1, and 3 shifts we need this amount of people. These are local and global coefficients for these expenses. So this is payroll for line 1, this is payroll for line 2, this is the payroll inside the timeline, and now we need to create a stable fixed payroll. So let's create a new block of inputs. Payroll, let's say fixed. Here I will place the name, this will be position, then amount of people on this position, so this will be salary, per person, per position, per month. So this will be a new block of inputs. So this will be fixed, just a second, fixed payroll position 1. So let's say we have 15 positions. This is the amount of people. So let's just imagine some data here. Here we can place this salary. Let's just imagine this data. So this will be salary, fixed salary total. So this will be this column multiplied this column. So these are the inputs, so I'm coloring these cells with blue, like all our inputs. We have a unique rule through the whole financial model that we create. Then Then we create a local coefficient for scenario play, then global coefficient, and fixed salary totals, let's say totals final. So local coefficient will be here, so this is the input. Then global coefficient, I will do this for global coefficient. This is input as well. Let me just color the header. And now let's calculate the salary totals. So I'm taking this value, multiply on this coefficient, multiply on this coefficient. So this is global coefficient for fixed payroll, and we also have some global coefficient for the whole payroll expenses. Global payroll coefficient, so we are adding this coefficient as well, so to make us be able to play with all this data many steps ahead. And we will build cash flow statement when we build simple discounted payback period, internal rate of return, so we can just play with all these coefficients without touching the inputs themselves. So we need to increase all these expenses. We can do this. If we want to increase only one position salary, we can do it like this. And now let's put these expenses inside the timeline. So let's copy this table, the previous table. So the name will be payroll fixed. Here I will place the names of positions. And now I will write a very simple formula. I will take these values, I will freeze the column and multiply on the line where we created the timeline. Let's go up. So we have project timeline, and we have the line number 45, when 0 means that we don't have operating activity at this moment, and 1 means that we have an operating activity at this moment. So these expenses will start on December 23. So I'm just using this line, I'm freezing this line, then I'm gonna press enter. Now we'll extrapolate this formula to the bottom and to the right. So these are fixed expenses, fixed payroll expenses. I'm coloring it with red because they will go to the cash flow statement. So you can play with all this stuff easily. And what is valuable, for example, I would like to displace the start of our project to September 23. So let me go to September. So our expenses displaced to September 23. Here we have September 23 as well. So we can easily displace the huge amount of data. We can create scenarios, display investment plan without retyping the inputs. So we can very easily and we can fast create different ways of business development and see what will be the cash flow statement, what will be the simple discounted payback period. So I hope you enjoyed this video. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I'll be giving the link to the playlist where I will be sharing all these tutorials, and when the whole financial model will be ready, I will be sharing all the links how I created this model from scratch in the description of this video as well, so you may watch tutorial by tutorial. So see you guys in next videos. Thank you and bye.